If you're going to find the best yields, you have to shop around. You just can't sit back and wait for those better returns to come to you, because a lot of the bigger banks have a lot of pricing power and they've been really stingy about increasing the payouts. Online banks, by contrast, are in a bit of a price war, paying, kind of leapfrogging each other in terms of who can pay top dollar. And so as savers and individual investors, we can exploit that to our benefit. The top yields now, even on a savings account that's available nationwide, 2.25%. So that's critically important because the Fed's inflation target is around 2%. So for the first time in more than a decade, savers are in a position where it's like, hey, I can at least preserve my buying power.
Seems like the obvious choice would be to go for the higher yield. I mean, you might take a look at a 5-year CD, for instance, and see 3.33% and be tempted by that. But in a rising rate environment, you don't necessarily want to lock that in, right?
I agree. This is not a time to be chasing yield, and there's a couple of reasons why. One, there's not much additional premium. Right now, 1-year CD, you can get 2.6%. You have to go all the way out to 3 years just to hit the 3% mark. And as you noted, the 5-year doesn't pay much more than 3%. And we're in a rising rate environment. And so you've got the risk of being long and wrong if you push out into too far of a maturity, not getting much in the way of additional yield, and then you watch interest rates race right past you over the next year. I like better the idea staying in something shorter, like a 1-year CD. Give yourself the flexibility to reinvest 12 months down the road in a presumably higher interest rate environment, and that may be a more opportune time to look at those longer maturities.
So give me a benchmark number here. What should I be making on my savings right now? And
Tyler, your liquid savings?
How dumb am I if I'm not?
Well, I set the bogey at 2%, but in reality, you can do better than that. But there are savings accounts that are available nationwide with no minimum deposit that are paying yields in excess of 2%. So everybody watching right now is in a position to take advantage of that. And if you don't, you're leaving money on the table. I mean, we talked about the inflation target of the Fed at 2%. I think that's the other thing about that critical threshold, Tyler, is being able to preserse the buying power.
What do you say to people who remain suspicious of doing business with a bank that doesn't have a storefront on the corner, that isn't one of the big brand names, though some of those big brand names have not treated their customers all that well? We know who we're talking about here. But what do you say to them about doing business with one of these online banks?
Well, just because you've never heard of it, it does not cause for concern. They're regulated. They're federally insured just the same as any other bank. And a lot of them, what you're seeing is the online banking division of another existing bank or financial services entity. So, in a lot of cases, you may be dealing with a much larger entity than just what you see with the internet bank.